The bank said no to approving your finance. The building and pest inspector found termite damage in the home and you're going to have to cancel the contract. Your tenants have damaged the property and done a runner. You've missed out on deal after inspecting home after home, wasting your time on the weekends. Now, these are some common property pitfalls and objections that I see every day. Things can and will go wrong. That's terrible. Things can and will go wrong, just like that sentence. And so when it comes to property investing, you're going to hear a lot of problems and you're going to have a lot of no's along your journey. So in this video, I want to unpack the reality of building a property portfolio when you're trying to give yourself and your family more choices and how we can overcome these objections and no's along the way. Before we unpack where you'll hear no consistently, let's unpack why overcoming no is crucial for your success overall. Now, we need to be able to overcome these hurdles and build resilience along the way. Things will go wrong, like I said. And so in my journey, lots of things have gone wrong. We've had renovation budgets blow out. We've had asbestos uncovered on properties. We've had tenants upset with damages on the home and issues to resolve. And so you can only do your best in these situations and you can only control your side of the situation. And so that's why keeping a level head and being in control of your emotions is very important. You want to be a good steward when it comes to property investing. You don't want to be a slumlord and you don't want to let your properties fall into disrepair. But also on the flip side, you don't need to do everything that people ask of you. And so it's just about finding that balance along the journey. You're going to get objections along the way, and you can only control how you handle those objections. And so in my opinion, you should be providing a quality roof over people's heads. You should be addressing maintenance concerns. You should be on top of your finances, making sure that you're repaying the bank, the repayments that you're owing them. And so that means running your numbers and your due diligence to make sure you don't overstretch yourself and your family as part of this investing journey. Developing these skills and habits and demeanor is very important. I think we only really get to lease, these investments that we're making. It's only for while we're on this earth, and then you're passing it off to your children, or someone else is going to buy the property for their own home or an investment. And so that's why I like to use the term steward rather than landlord. So how can we steward these situations well and overcome these objections? So let's unpack a lot of the objections when it comes to property investing. The biggest one that I see for first home buyers and investors and owner occupiers alike is the banks, the financing side. There's been lots of commentary around property for a long time, and I've heard this quote many a time, that property is a game of finance with a couple of houses thrown in the middle. And that really is true. That's one of the reasons that I became a chartered accountant by trade before starting the buyer's agency. So I used to work in an auditing firm. I then worked as a commercial accountant, as a financial controller, and then started and scaled this business at Purpose Property, which you can head over to purposeproperty.com.au if you're looking for a Brisbane-based buyer's agent. But the idea is that you need to have an understanding of the brokers and banks to start and scale a property portfolio. Now, a lot of the common objections come around pre-approvals or getting access to the lending. And so this does mean you need to show clean financials. So what can you control on your side of the fence? You can't control what the banks are going to say, but you can control how you show and share your information. So can you go through a window of saving? Can you track the income and expenses in your property portfolio and show the banks that you're consistently saving money? Those savings are then going to go towards your serviceability. And so there are two things the bank are looking at: your serviceability and your capital. So if you're saving money, you're creating capital, you're building up cash in your bank. And then you might also own a property. So if you've got access to equity, if you've got serviceability, you might be able to draw down on that equity, then use those funds to make another property purchase. Now, the way I like to talk about the banks is start with your big banks first. Either go to them directly, which I've done in the past. I went directly to CBA, or go to a broker. If you're looking for a broker, head over to purposeproperty.com.au and you can book in a chat with my broker as a starting point. And so sit down with the broker, or sit down with the bank and say, I want to invest. What's my maximum borrowing capacity? So you might sit down with CBA and they might say $1 million. You've got $100,000, Luke. We're going to lend you based on your income, based on your current position, $1 million. That's where you then need to make the strategy and make that next decision. Now, you then might acquire one property, say for $800,000. And now what do? I haven't got any more borrowing capacity. CBA is only going to lend me another $200,000. Well, maybe you look at a second tier lender or a third tier lender. If your risk tolerance is there and the strategy is behind it and you've run the numbers, that's very important. You've run the cash flow of your first property purchase, you've run the cash flow of your household, and you've run the cash flow of this next property purchase, then you can understand, yep, I can take on more debt. It might be at a slightly higher interest rate. So I might take on a 7% interest rate rather than a 6% interest rate. But that might give you another $1 million of lending. And so now I'm controlling a $1.5 or $2 million asset base rather than a $1 million asset base. And so working with the brokers and banks and not taking no for an answer is the way Emily and I were able to continue growing in our property journey. We certainly received a few no's. I've got a story that I've told a few times here on the channel that we almost lost our dream home site because it was the house was in a pretty bad state when we bought it. We almost lost this triple Gable Queenslander, or the growing gables build, when we first bought it in 2020 because a broker let us down. We were working with a very infamous or famous YouTubing broker, and it was a real disappointment. We were 7 days into a 14-day finance clause. We'd had 2 properties that we bought, and this was our 3rd property purchase. And that broker dropped us at 7 days. They said, we can't refinance the Suncorp. The BDM, which is the business development manager, is not going to approve the deal. Sorry, we can't help you. No backup options, no second or third tier lenders looking at us. Just, we can't help you. Sorry, you're going to have to cancel the contract with your dream home that you've now been fighting with 10 other buyers to get. And Emily and I weren't going to take no for an answer. I called up CBA directly, which is a mainstream bank, and I was able to get the finance directly with CBA, which I don't know why I didn't do that in the first place. I just thought, this broker is well reviewed. They're on YouTube. They must know what they're talking about. So don't take what someone on YouTube is saying as gospel. Make sure you're taking the action for yourself. No one cares more about your financial journey than you. And that was certainly the case for Emily and I at that point. I called the banks day after day at CBA, and we ran into a lady there called Sarah. She was brilliant to deal with, and we bought the dream home. Yes, there were holes in the floors, and it had termite damage, and it had smoke stains all over the walls, and we renovated it ourselves with a very small budget. But if we hadn't pushed through that no when the broker dropped us in that finance clause, we wouldn't have got the yes. And if I hadn't gotten this house, we wouldn't have bought the unit block and costs. And so the snowball continues. If I hadn't bought costs, the other properties we bought in our property journey wouldn't have eventuated. And so that leads me into this next section, which is finding the right deals and objections in the actual negotiation space. As a professional buyer's agent, myself and our team look at hundreds, if not thousands, of properties. And so finding the right deal can be difficult. I like to come back to the fundamentals, but even as a professional buyer's agent, we're not getting every deal we're negotiating on. And if you are a buyer's agent doing that, you probably are overpaying if you're buying every deal that you're looking at. So I just be very wary of buyer's agents that say they buy 50, 60% off market, because the long-term data shows across Australia that about 20 to 25% of stock is sold off market. I think it's 22% from last check. So you're going to get rejected on deals. You're going to offer on homes and you're not going to be accepted. But can you sharpen your offers? Can you learn about the way the selling agents want to talk to you, how their normal process goes? Every selling agent's going to have a slightly different process. We certainly got that experience as buyers agents working with different agents, knowing that different agents are going to run a expression of interest campaign or an auction campaign with pre-auction offers, or they want the deal structured in a certain way. And so if you can learn those objections that come up when you're making an offer, and if you can learn the criteria that the selling agents are looking for, that's how you can get access and get a yes on the right deals, and get less no's when you're looking to source and find the right property. This leads me into negotiation and due diligence. When you're negotiating, I don't want you to feel like you need to screw over a seller and push them for every dollar they've got. I certainly don't like to operate that way. Yes, as a buyer's agent, we're acting on our client's best behalf, but we're not trying to be rude. We're not trying to put the thumb over someone else. We're trying to get a transaction to happen and with all parties to be happy. We want to buy good quality deals for our clients for the right property at the right price in the right location. But also, you've got to have some to and fro and create some goodwill. And so there are some deals where we've asked some massive discounts, $50, $80, $100,000 based on the damage we found in a property. And there are other deals where I've seen clients squabble over $500 or $2,000, where they've gone back and forth 4 times on a building and pest. Don't be that guy. Generally negotiate with good faith and try and find an amicable position when you're negotiating to reach a win-win outcome where the buyer is happy and the seller is happy with the landing position on price and on outcome. And this leads into your due diligence. Make sure you do proper checks. Now, I'm probably a bit unique. I buy some sites cash unconditional in terms of the offers. But if you're a general buyer and you're only going to buy 1 or 2, 3, 4 houses in your time, you want to make sure they're structurally integral. So we encourage our clients, some occasionally don't, but do a building and pest, or at least make sure the seller's provided one to you. Do your due diligence. Make sure you've had a chat with your broker and your bank about your finances. You've got your building and pest inspector lined up. You know how the contracts work and when you need to release deposits and pay money, so you're not breaching contracts. Make sure you're doing those things so you don't run into roadblocks throughout that process. This leads me into closing on deals, property management, and tenants. Now, this is where a lot of people get out of property. A lot of people invest in property. They have headaches with their property manager and their tenants, and they throw in the towel. It's all too hard. The tenants are annoying. They've asked for a clothesline, or they've asked for repairs when there's been damage, or I'm out of pocket $5,000, $10,000, $20,000. I've got to go to my insurer to get these claims, and the insurer's being a pain. These pain points are part of property investing. It's just a fact of life. And so if you want to invest in property, you need to do the administration. That means running your accounts. Make sure your tenants are paying on time. Checking in with your property manager to look after the property. Emily and I have self-managed in our journey, and we've used property managers. And I think it's about the right property and the right management. I generally say to clients, use a property manager. And so you're generally going to have the property manager deal directly with the clients, and then you can deal with your property manager that way. I've had lots of positive and negative experience with different tenants over the years, but I think it goes back to that earlier point of being a good steward. You can only control your side of the fence, and I think it's important to try and keep emotions out of these situations. Some people can use emotionally charged words. We've certainly found that when deals have crashed in negotiations or a tenant's been very upset, they can say things that they might not mean. They might attack your character. They might attack you personally. And I think it's important to take a step back, try and get involved where you need to be, and then just keep it at arm's length. That's why property managers are great, because they can allow that to occur. Like I said, I've managed directly in the past. Emily was directly managing one of our properties, and we've had some great people go through that property, and great feedback and tenants, and also some headaches along the way. But the big thing is you're addressing those as they come up, and you're being very open and honest with people about that journey. At the end of the day, property investing isn't easy. Otherwise, everyone would do it. Everyone would go to the brokers and banks, get the finances. Everyone would negotiate on great deals with good fundamentals. Everyone would be on top of their tenants and on top of their accounting and finances and depreciation and tax. If it was easy, we'd all do it. But if you go through and you create a system and process with you and your partner, you and your family, and you work out each of these stages along the way, that's how you can start and scale a property portfolio. Once you understand how it works, it's actually not that difficult, and you can overcome these no's with less stress each time. Now, I've had alopecia, which could have been triggered by stress, could have been triggered by a COVID jab, who knows? And my eyebrows are growing back in a little bit, and some of my hair's growing back in. But you don't want to stress yourself out too much along the journey. But what I can say is that you can learn and adapt to these situations. And if you have professionals in your corner, like a buyer's agent, like a mortgage broker, like an accountant, like a property manager, and you can build the right team around you, you can leverage off their expertise when times get tough. And that's probably my biggest takeaway, is one of the best ways for you to push past the no's and push past the objections is to build the team and experience around you. Part of that can be YouTube mentors. You don't have to pay for my buyer's agency services. You don't have to pay for our property investment course. And same with all the other guys out there creating content, and whether they're buying across Australia or in Sydney or in Melbourne or regionally, you don't have to pay, but you can use myself and these other YouTubers, and I like podcasts myself and listening to content, to give yourself that wealth of knowledge. If you can build your knowledge and then build a physical team around you, whoever that is for your specific circumstances, that's where you can overcome objections and create success over the long term through your property investing journey. Property is not overnight. You're not going to buy a house and be a millionaire within 1 week or 1 month or 1 year. Some people do it, but they're the needle in the haystack. For your everyday family, you want to play the averages, and knowing that property is going to outpace inflation, knowing that long-term and Brisbane, for example, growth's been around that 8% mark over a 30-year period. And so look at your finances, look at these objections, overcome them along the way, and build the team around you. If you want help buying here in Southeast Queensland in the next 3 to 6 months, head over to purposeproperty.com.au to book in a free chat with myself. Myself and the team are expert buyers agents here in the Greater Brisbane market. We specialise in 5 councils: Brisbane City, Logan City, Moreton Bay, Redlands and Ipswich. And we're planning on expanding to the Gold Coast at the end of 2025, which is very exciting. We have a top-down approach where you get to work with the big dog, myself as the owner and director of the business. And then we have managers in place who cover and help us with acquisition. And then we have associates below them who help us cover the ground and network with agents locally. So if you're interested in that and the buyer's agency service, head over to purposeproperty.com.au. We've also got a course and a mortgage broking link on our website as well if you're interested in those things. And I'd love to hear your comments down below. What's the toughest no you've received? I'd say the toughest no I've received was that broker dropping us 7 days into a 14-day finance clause. I remember sleepless nights, but it's been so worth it pushing through those objections, pushing through the hard times to give myself more choices with my boys and to be able to drop them off later to daycare and pick them up earlier, and to maybe take 6 to 10 weeks of holidays a year rather than 4, and to have more flexibility with clients and my time. I think that hard work has been so worth it. And it's such a shame that Emily passing away from ovarian cancer doesn't get to enjoy it. She got to enjoy some of it, but she doesn't get to enjoy it in its full. But this is only temporary. This is only for this life. And that's why I have a greater hope as a Christian and a greater faith that there's something bigger than this. And so that's why I think it's important to steward well along the way. And so I encourage you, take that next step in your journey, overcome the objections along the way, and keep pressing forward for more choices for you and your family. This has been good. Thanks for sticking around. Click this video over here, and I'll see you in the next one. Peace.